Yeah, listen, this bull market has been spectacular and in the face of everything, like you said, including rising debt, government spending. We still have some geopolitical concerns. We still have a dollar that looks like it's weakening. You had mentioned, I heard before about my trifecta of inflation. And I think maybe the only thing that can really stop the train is if we get from a stagflation type of environment into a hyperinflation type of environment. And then the rate cuts obviously look like they're too late, like Trump has been suggesting, but they could actually do more harm than good. So we'll be watching for all of that. And the dollar, you have it up right there. It didn't quite make it over 100 like people thought it was going to go back into some kind of bull move. It's been in a downtrend, and this downtrend looks to me like it will continue. We're looking at about 94, 95 next stop. That's inflationary. We saw the big move in gold and silver. Well, if silver really starts to outperform, especially as an industrial metal, that's inflationary. And sugar, if I may go into that for a moment, is my barometer in the grain market and softs, because sugar goes up in times of stress and people turn to sugar when they cannot afford to buy other types of food. It often measures sort of an insidious level of inflation where social unrest becomes more prevalent.
From the metrics that you look at, what kind of shape you think the U.S. consumer is in right now? Because by depending on how you measure, anywhere from 2/3 to 3/4 of the economy, he or she is very important.
I'm really glad you brought that up, because I look at the retail sector almost like a grandma. In fact, I've been known to say granny retail. XRT, which is the ETF that I like to look at. And the reason why I like to look at that is because it is discretionary and staples. So you kind of get a good mix. So your Walmarts are in there and your e-commerce is in there as well. And basically, that was also a spectacular move higher, which is a good thing. So the consumer is encouraged by potential of lower interest rates, seems to maybe at this point brushed off the impact of tariffs, unless they continue. Although back to school, which is a big seasonal point in the U.S., actually dipped about 7.5% in terms of what people bought to get their kids back to school and how they bought. So if we're looking at this XRT that you're showing right here, over 82, it broke out of a massive calendar range, and that's bullish. But I have to tell you, in 2021, the high was 104. So we are talking about still a great distance away from that 2021 high. So you've got to watch this. The consumer stays in the game, great. If it starts to falter, not great. It doesn't necessarily have to lead, but it certainly has to participate, like you said, because of the 70% of the gross domestic product that it represents here in the States.
All right, so we're 85 now on XRT, and could go up to 104 is the most recent high. I would bet that, once that first September cut goes in and we see another one or two, et cetera, the consumer is going to keep at it, and this gauge could actually go higher. My worry is how much of this, and this is a gauge of discretionary spend, it's stuff you don't need, but it's stuff you want, right? My fear is that lower rates could just encourage consumers to leverage up, to use credit. What happens then?
Well, it's interesting, because one of the stocks that reports this week is Affirm, which is, the buy now, pay later type of situation. And that rose also during this back to school seasonal spending. So you're right, there would be a concern about debt for sure. And one thing we know never seems to go down, which is the interest rates paid on credit card debt. So, do we have a house of cards? Absolutely. But the point is, right now, what's so interesting about the consumer and the discretionary spending is my other little aphorism I made up, which is the vanity trade. They're talking about a maybe 6 to 7% of the consumer in the gross domestic product buying products because they are now thinner as a result of the diet drugs. And people don't talk about it that much in terms of the impact to the stock market and the consumer and retail sector. But we've seen a stock like Ulta, for example, trading at $530 a share. And you're not really hearing anybody talk about it. That reports too, by the way, this week. And then you have to think, Eli Lilly got murdered in Novo Nordisk, but they're coming back. So it's not just the drug companies themselves. It's really beauty, makeup, skincare, fitness, dating, All these things that, as it gets more and more mainstream and more affordable, people are going to start to spend money on, and then not spend money on, like fast food and alcohol and that kind of thing.